This is Stock Talk, a discussion of stocks in the news with the analysts of Zacks.com. Today we discuss the stock of United Airlines, UAL, the parent company of United Airlines, in the news just recently. UAUA is the ticker symbol. Stock is traded on the NASDAQ, and we had a very interesting situation on September the 8th when trading in the stock was abruptly halted on the NASDAQ amid speculation that the company was filing for bankruptcy once again. However, what happened was an old news story seemed to surface at a newspaper down in Florida, which subsequently got posted on the internet, and word gets out on the street about these things relatively quickly. That, combined with the fact that trading desks around the country are all kind of tied together on those exchange floors, really spread the news like wildfire. This speculation wasn't really news, and that caused the stock to plunge as the computer programs kicked in, halting the trading. Now, one reporter over at Reuters News Service put it this way: computers unable to see the mold on outdated news articles sparked confusion, a mass sell-off, and an emergency trading halt in the stock. And he says this highlights the pitfalls of increasingly automated financial markets. Anyway, the whole event caused shares in United Airlines parent to plunge 76% in a day after a news story, as I said, that was nearly 6 years old surfaced. It was a story back from 2002, and you're going to find this kind of interesting as we kick this one around with Tracy Reinick. Tracy is our value stock analyst at Zacks.com, and she's been following the stock from a fundamental basis. And Mike Vodicka. Mike is our momentum stock analyst at Zacks.com, and he'll be able to put the whole chart picture into perspective for us. So, a very interesting turn of events. I don't think in all of the years that I've been following the markets that I've ever seen confusion like this stop trading in a stock that's been in the news a lot lately anyway, which is probably where the concern came from.
Right. No, me neither, actually. And, we were commenting at the time that it was happening because we did go to look at their chart, that it was like a weird chart to look at because they did halt it apparently at about $3 a share, but the actual charts, if you were on your basic, stock market webpage, were showing it as basically like a penny.
Right.
So,
in fact, you brought a chart with you.
Yes.
That kind of reflects the immediate drop. That
yes.
is a chart of the day in which the incident occurred.
Right.
If you were to take a look at a one-year chart on that stock, however, it is a much different picture.
Yes.
You do see that steep drop, but you see then it leveling out because the stock did come back again.
Right, and it did come back as soon as they reactivated trading on that day. But, it's had some issues in the since that day. Right. So some of the concerns that were sparked by the possible bankruptcy, which didn't turn out to be the case, are still kind of lingering. And you can see it, you saw it in their last quarter. They had a severe loss of $2.7 billion last quarter. They're expected to have another loss this quarter. Estimates have been going up slightly in the last 30 days, and I think that has to do with fuel prices probably coming down because crude has come down. And we saw maybe a hopeful sign for some of the airlines a few days ago when Federal Express said that this next quarter wasn't going to be as bad for them because the fuel costs weren't as severe as they were anticipating. So I think that's why you're seeing some of the estimates track up. I think they're currently at about a $1.32 loss right now, and they were at $2.40 30 days ago, but it's still a loss.
And they're currently trading right above their 52-week low,
right.
Which is, it's just not even much above that 52-week low, which is another concern. It can't seem to break out much above that because it has a very wide trading range
right.
Overall. Mike, has this ever happened as far as your recollection goes back?
Well, as far as automated trading systems responding to actual data, yes, I have seen this happen before. And what the analysts that you were referring to or talking about is, these systems are fed just pure data. When they see that data, they respond to it. So a lot of times what happens is it'll be an overreaction or maybe a reaction to inaccurate data. So that has created problems. I have seen that before. But really, on a larger scale, I think it really represents the attitude of the market right now, and even more specifically, the perception of the airline industry in general. We're talking about a very jittery group of investors that are used to being hit with bad news and kind of running for the door.
Mm-hmm. So you think that that the market is looking for any reason at all to sell off any stock, no matter what stock it may happen to be.
Sure, absolutely. I mean, we're seeing the same thing play out with Lehman right now, where yesterday it was down 40%, and then this morning it's down another 40%. Investors are used to getting hit with bad news, and they know that if you're going to avoid trouble, you have to be very nimble and move out of it as quickly as possible.
But overall, as I said, the 1 year chart, it looks like a pretty smooth chart. I mean, it has a flow and ebb and a flow to it.
Yeah, well, when I was looking at the charts here, I was actually kind of surprised to see that shares of United Airlines had been trading right about $50 going into 2008. And that's fairly respectable considering they had merged out of their bankruptcy filing only a year and a half ago. You hadn't really seen a lot of these issues creep into their stock price. Now, as over the course of 2008, like you said, we have seen a steady downtrend, and the low point being $2.50 a share, and really the biggest reason is fuel costs. Now, as Tracy referenced, estimates have gotten a little better recently as oil prices have come down from their high of $145. So it's gotten a little bit better, but on a general, macro level basis, this is a company in an industry that's, has big problems on their hands.
Zacks Equity Research does cover the stock. Analyst Ann Heffron, in her recent report of July of this year, brought up the recently announced plans from the company to reduce 2008 mainline domestic capacity by about 20 to 22% by the end of 2009. So capacity is an issue for this airline, and also their cost structure, while it has been improved, is still higher than those of its competitors, and that's another negative apparently.
Right. I mean, they're still looking to cut costs wherever they can. They're still, furloughing pilots, flight attendants. They recently announced, put out there that they were going to try to charge for food on their European flights now, which it's common on the domestic flights, but on their, overseas flights, it's pretty much unheard of to charge in the coach class for food. And then a couple days after that, they retracted it, saying that customer feedback wasn't positive. So, it's like $9 I think they were going to charge. So you can see how extreme they're getting, that they actually think that cutting $9 on every passenger for the overseas flights is actually going to get them where they need to be. And I do think the overseas flights are their bread and butter. That's where they are able to charge the higher rates. They have the bigger jets going there. They're doing pretty well on the Asian routes. But yeah, domestically they still have some issues. They're getting rid of about 100 aircraft that aren't as profitable now.
So there's still some clouds hanging over this company.
Yes.
All right. UAL Corporation is what we talked about here today on Stock Talk. UA, the ticker symbol, traded on the NASDAQ. If you have a stock in the news that you would like to hear us kick around here on this forum, why not email it to us at mailbag@zacks.com. We'll consider it for future webcasts. With Tracy and Mike, I'm Terry Ruffalo.